If we want to become great investors, we must keep learning at all times. There is no rest in this game. We all want to beat the market, which is extremely difficult, but there is one group of people that seem to accomplish this year in and year out. These are the super investors, and we can learn a lot about investing by studying what the greats are doing. So, what do the big boys own, and what can it teach us? Welcome to the Quality Investor. Today, we are discussing the top holdings of those elite super investors, those that regularly beat the S&P 500. It really is illuminating to see what these investors buy, and we can discern some important information. We can get an idea about what they believe are the strongest businesses in the world, and many of the top investors share the same traits. They usually have long-term hold periods. They all tend to have concentrated portfolios, and they concentrate in certain sectors. And what they buy may reveal their thoughts about the economy and what industries are ascendant or declining. As we dive into it, please hit that like button and subscribe to the channel for more stock analysis content. Now, it's important to understand that we do not copy what these investors do. That's a poor strategy for a number of reasons. One is we have no idea when they bought a stock. In other words, we don't know what their entry price is. Secondly, due to the amount of capital that is under their control, they'll have access to deals that retail investors will never have access to. But what we can do is analyze what they view as strong moat long-term investments. And we should study those businesses to see what makes them great. And another often overlooked point is that we can learn a lot by what they do not buy. So let's get into it and see what these elite super investors hold right now. So we're going to look at some of these investors at a very good website called Dataroma. This site tracks many of the top investors in the entire world and shows you what they hold in their portfolios and gives you breakdowns of what they buy and sell every single quarter. You can see investors like Bill Ackman, Bill and Melinda Gates Foundation, Michael Burry, Terry Smith, and of course, the great Warren Buffett. The first thing I want to look at is how many stocks in each sector these super investors own. You can see here in the financial sector, they own 587 stocks collectively, followed by the technology, healthcare, industrials, and so on, all the way down to communication services, utilities, and real estate. And the chart here below, it shows the sector as a percent of their total holdings. Right away, we can see that the super investors are highly concentrated in the financials and technology sectors. And of course, that makes a lot of sense. Both of those industries have very high margins and also run very capital lean, meaning they don't have a lot of capital expenditures. What that means for investors is they generate a lot of cash that they can distribute to owners. And in my own portfolio, I'm also heavily concentrated in both financials and the technology sectors. Here is MSCI in the financial sector. Just look at how that margin has grown over the past 15 years, up to 82%. ROIC and ROCE also have grown so much, up to nearly 30% for ROCE. Another great example is Visa. Just look at that incredible gross margin. Right now it's at 79%. Their operating and free cash flow margins also have grown very well over the last 15 years. Return on invested capital, return on capital employed, also just growing rate over the last 15 years, up to 30% for Visa as well. I also want to point out the sectors that are very light in investment from the super investors. Look at these bottom three here: communication services, utilities, and real estate. Real estate, those are a lot of REITs. It's a little bit of a different game, so I'm not going to go into it here. However, communication services and utilities, one thing they both have in common, they're both highly commoditized industries. Think about your wireless plan for a minute. You have Verizon, AT&T, T-Mobile. Each of them are highly competitive to try and get your business, constantly offering deals for new plans, new phones, and many people switch all the time to take advantage of all sorts of deals with bundling, with streaming services, and so on. And then we have utilities. And what do we know about utilities? Well, they're very regulated as an industry. And in order to maintain that infrastructure, it requires a massive capital expenditure. And that type of capital expenditure requires a lot of debt that they have to take on. And one side effect of all that regulation is that the governments actually cap the returns on capital that utility companies can actually receive. There's a limit as to how much return you're going to get out of a utility. At the end of the day, the only real reason to invest in a utility is for dividends. So what are the top holdings in super investor portfolios right now? I have it sorted by ownership count. So that means there's 33 super investors that own the Class A stock for Google. The second one is 31 at Microsoft Corp, followed by the Class C stock for Google, Facebook or Meta, Amazon, Visa, Berkshire, MasterCard, Wells Fargo, and United Health Group. What do all of these have in common? They're pretty much tech and financials. And of course, the number 3 was healthcare, and we have United Health Group coming in at number 10. But let's take a look at what these super investors bought in Q4 of 2023. 8 investors added Microsoft to the portfolio. 8 more investors added Google to the portfolio, followed by Amazon, Charter, Visa, Berkshire, Apple, General Motors, Bank of America, and Danaher. These investors continue to buy the top performing stocks in the S&P 500 with Microsoft, Google, and Amazon. And of course, with Visa, Berkshire, you're always going to get that steady, stable return. And despite all of Apple's troubles, the investors are still buying Apple. There's also a few interesting ones on this list. Charter Communications, General Motors. The Charter Communications seems pretty interesting to me because I do feel that Charter Communications is in a dying industry in cable, and I'm not too sure why they would want to invest in that communication sector. So of course, they may be seeing value there that is completely beyond my expertise. General Motors is also pretty interesting because they're in a legacy industry in the auto world. They're definitely lagging behind Tesla massively in the EV race, and they also have a lot of debt on their books at General Motors. Very capital intensive business. Danaher, on the other hand, is not that surprising. They classify in the industrials sector. However, they manufacture equipment for the healthcare industry. Their 3 segments are biotechnology, life sciences, and diagnostics equipment. So what this tells me is that these investors see a lot of value in the big tech still. And why not? AI has taken the markets over by storm, and all of these big boys want to get in on that action. What is interesting to me, however, is what is missing from that list. And that is Nvidia, the hottest stock over the last year. In fact, only 5 super investors own Nvidia. Not only that, a vast majority of the buy-sell activity last quarter was selling Nvidia from their portfolios. That may have been a mistake, however. You can see since the beginning of the year, Nvidia has not slowed down one bit. But the lack of ownership by super investors around Nvidia tells me they may view it as too expensive. We'll see what happens when the 13Fs for Q1 of 2024 come out. And of course, by selling off in Q4 of 2023, most likely these investors were taking profits. Another very interesting one to me is the lack of ownership around Netflix. Only 4 super investors own Netflix. In my opinion, Netflix has solidified themselves as the major player in the streaming wars, and quite possibly is leading to a total monopoly of streaming. Again, it's very curious. The majority of activity in the Q4 of 2023 was selling off shares in the portfolio, possibly taking profits again. But so far, year to date, 2024, Netflix has definitely been on fire. So let's take a look at portfolios of a few of these super investors. The investors I'm about to show have influenced my investing philosophy quite a bit. The first is Bill Ackman of Pershing Square Capital Management. Bill Ackman has a highly concentrated portfolio of only 8 stocks, and the portfolio itself is over $10 billion. His largest holding is Chipotle, followed by Restaurant Brands International. So he's highly concentrated in restaurants. He also has a hotel in Hilton, a master community planner in Howard Hughes Holdings, and of course, tech with Google, infrastructure, Canadian Pacific Kansas City, and Lowe's, the home improvement retailer. So this portfolio of 8 stocks actually returned nearly 27% in 2023. So I think that's a testament to highly concentrated portfolio. One argument against diversification is that at a certain level, you start to get diminishing returns, or really, your returns basically revert to the mean or the market average. Bill Ackman is also an activist investor, and his investment in Chipotle and the activism he did for the company thereafter was instrumental in its turnaround and run-up that we see today. This is all his activity for Chipotle since he's bought it. He made his first buy in Q3 of 2016 and then added nearly 2.3 million more shares in Q4 of 2016. He saw the price swing down quite a bit up until it started really taking off in Q1 of 2019. And this entire time, he was really instrumental in reorganizing the board and executive management of Chipotle. Possibly my favorite investor, Terry Smith of Fundsmith. He is an investor out of the United Kingdom, and many people call him the Warren Buffett of the United Kingdom. His investing philosophy has probably influenced me the most out of any of the super investors. From him, I learned the importance of two metrics: return on invested capital and free cash flow. He owns quite a bit more than Bill Ackman, however, holding 40 stocks currently at a portfolio value of $23.8 billion. His largest holding is Microsoft, 12.5% of his entire portfolio, followed by another tech giant, Meta Platforms, and Stryker and IDE XX Laboratories. And you can see, looking down the list here, his portfolio is made up of high margin, high ROIC tech businesses such as Microsoft, Meta, Google down here, as well as companies that are essentially consumer staple companies such as Pepsi, McCormick, Nike, Procter & Gamble. He's a very big believer in purchasing investments in businesses where people need the services. People always need shoes. People will always need toothpaste and the like from Procter & Gamble. His biggest purchase in Q4 of 2023 was Fortinet, a favorite of mine personally. Before getting into my last super investor here, I am curious as to what super investors all of you follow. So please comment below with the types of super investors you guys like. And the last one I'm going to go over here is Chuck Aker of Aker Capital Management. Chuck Aker is another long-term minded investor with that value mindset that I gravitate towards. And you can see here he has 18 stocks in his portfolio. So this is also a very concentrated portfolio. His largest holding is MasterCard at 18%, followed by Moody's at 15.7%. And of course, these top two are some of the best businesses in the entire world. Along with MasterCard, he also owns a little bit of Visa as well. His third largest, also a favorite of mine, American Tower. American Tower Corp, of course, builds cell towers and leases them out to companies like Verizon and AT&T for their 5G networks. And you can see his sector analysis down here. He's heavy in financials, followed by the services and technology. So that kind of follows the theme of the other investors I've been talking about. Heavy in technology, heavy in the financial sector, as well as buying businesses that create products that people need. Bill Ackman in food, Terry Smith in consumer essentials like toothpaste with Procter & Gamble. These businesses are also very wide moat businesses. MasterCard and Visa are essentially a duopoly. Moody's and S&P Global, another duopoly. So what we can learn from these super investors is they really focus on high quality businesses. All the businesses here with the highest ownership count, they all tend to be leaders in their industry. Taiwan Semiconductor, the largest manufacturer by far of semiconductors in the entire world. JP Morgan & Chase, the largest bank in the world. Walt Disney, the largest entertainer in the world. So these super investors recognize that these businesses became the largest in their industries for a reason. They are compound growth machines, not only delivering value to the customers, but returning capital to shareholders. Add to the fact that many of these businesses are not only the highest ownership count, but they're also the most bought in the most recent quarters, tells me that these investors anticipate long growth ahead for these businesses. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.